Hello and welcome. You're watching Your Trades on ET Now with me, Sneha, and with me as always is Priyanka. Priyanka, range-bound trading day yet again, but again not much to complain about because we've ended the day in the green and just shy of that 23,400 mark is where the Nifty has ended at 23,398.9. Literally just 1 point away from 23,400 is where the Nifty 50 has ended. Sensex also 0.3% gain. Nifty Bank, however, slightly under pressure, 0.1% in the red, but not much to worry about. However, it was the broader markets that outperformed the benchmark indices today. You had mid-cap index up almost 0.8%. The small cap index was up 0.7%. So good moves coming in. Not much to complain about when it comes to the entire performance that we've been seeing across the street today. India Wix, yet another part of the market that has taken away all the highlight today, because also down 6.5% was where India Wix was today. So volatility seems to be largely cooling off because we have been seeing a non-stop drop in India Wix coming in over the past few sessions. But sectorally then, what did well today was Nifty Realty. On the back of Sobha making its announcement of a rights issue, you had the entire realty space that was doing pretty well. Likes of Sobha, Prestige Estates, DLF, all of these stocks have done pretty well today. Godrej Properties, you name it, and those stocks have done really well today. These moves were followed by Nifty IT in the green, 1% uptick coming over there. Auto, Pharma, Financial Services also in the green. PSU banks nominally in the green. On the flip side, though, you had FMCG and energy. These were counters under pressure today. FMCG was quite under pressure today. 0.7% lower is where FMCG was on the back of the falls we saw in HUL, Dabur, United Spirits, Britannia, Tata Consumers, all of them lower anywhere between 1-1.5%. But while that was a sectoral move, let's also take a look at what were the top buzzers in today's trading session. And the entire defense pack also made some buzz on the back of what Rajnath Singh has tweeted today about the indigenization of defense in India. So on the back of that, you had Garden Reach up almost 12.5%. You have Mascot Dock, Cochin Shipyard, all of these stocks, Bharat Dynamics have done pretty well. And the next space I also want to talk about is the sugar sector, because sugar has also been a sector that was a buzz today. Some sweet gains being seen for sugar stocks, if I may, on the focus of over MSP hike reports. So you have the likes of Balrampur Chini, you have Dhampur, Sri Renuka, EID Perry, all of these stocks were abuzz in today's trading session. But Priyanka, what else did you spot and what stood out to you from today's trading session?
Sectors which were buzzing today. You talk about UBS report on insurance, where we talk about in detail about the surrender value. But then what I pick from here is, Snehi, that of course the sentiment was lifted globally also, because we saw a softer US CPI and of course India inflation CPI, which was at 12-month low. Indian indices, that 23,400, that's a resistance level also from last 2 days. We just briefly touched it yesterday and we fell from there. But then today being the Nifty expiry, of course the move was not that bad. But a couple of news what Snehi covered, talking about the insurance space, wherein the regulators master circular about the calculation of entire SSV, that special surrender value, which will of course require policy holders are treated fairly. There's a report by UBS also on that, which talks about players, their profitability getting impacted. Sectors de-rating also they mention is overdone. So this sector is of course going to be in focus, and stocks were reacting also today. Then another couple of broking notes on individual stocks like Arjun Chemical. There was a buy rating from BNK. Stock, the target was 864 rupees. That means an upside of nearly 40%. This was one stock which was buzzing. MTR Tech, Incred initiates a buy rating here. Sees an upside of around about 48% with a target of 2644. That was one such stock. And they talk about the CAGR at which the company can grow for the period of FY24-26, which could be nearly 40%. In fact, more than 40%, and a margin expansion of about 500 BPS also they've mentioned about. So a couple of stocks, and of course, rights issue we've briefly covered, but sugar stocks also you've spoken about that, and the entire sugar space has been buzzing from last 3 days, what we noticed. So a couple of other stocks like Paytm, and of course it's the second straight day, 7% up. Couple of reasons out there. L&T, Goldman Sachs did a positive note on L&T. Stock was up and did gain an order also, secured an order also, which was 2% up today in trade. Now, how do we make the markets from here? What do we make of the markets from here? What are the technical levels one needs to watch out for. Kunal joins us from studio only. Kunal, good afternoon. Welcome. This 400 level was actually a resistance level also. If you see, yesterday there was a good call writing which happened at this strike. What do you think? We've briefly, because we could not close above that. Is this still going to be a resistance level, or bulls are going to ride it over?
I think 23,400 is definitely a resistance for the index, and we've still not. So we've been making intraday highs for the indices, but it's still not an intraday or a closing high for the index. I think the closing high which we have seen for the Nifty is around 23,407, 408 marks. So we're just shy of that by maybe 10 odd points for the Nifty. But that doesn't take away the kind of recovery which we've seen for the market breadth in the last 4 to 5 days. There are so many fresh sectors which have managed to spring back into some kind of positive action. Many sectors which are making a comeback in terms of their huge underperformance which these stocks and sectors had shown for the last 6 months to 1 year or so. I think that's where the markets are really trying to concentrate into. And I believe that's where one should probably look out for in terms of short-term trades. So I believe that the major action now is devoid of what's happening on the indices, because we're still largely stuck into a range for the index. The fourth consecutive day, if I'm not wrong, for the Nifty to try and remain into this 200 to 300 point band, 23,500 as a resistance and 23,200 to 50 as a support.
All right, well, 23,500 on the upside, and we have been seeing some range-bound trade like you said, Kunal, but what would your picks be? How would you invest traders and investors to navigate a market where we're not seeing much happening at once?
So I think it makes sense to go with momentum trades over here. So I'll go with two buy calls. Gujarat Gas is the first stock which I would actually suggest as a buy. Looks very interesting in terms of the chart potential breakout. The stock coming back into a multi-week, multi-month breakout on closing today. So would suggest a buy with a target of 655. Stop loss could be kept at 612. And Balrampur Chini, third consecutive day of very strong price volume action for the stock, indicates that there could be a big potential turnaround for Balrampur Chini also going forward. So would suggest a buy with a target of 460. Stop loss at 427.
The Shuka pack has made it to your radar also. Thanks very much, Kunal, for both the recommendations. But Srishti also joins in with the breakout patterns that she has recognized. She's identified. Srishti, tell us, you've picked both the breakout stocks, or there's a combination?
No, indeed. In a market like today, both the counters are on the breakout side. And first up, let's have a look at Cholamandalam Investment. This particular counter has been on the roll because this stock ended the day at the day's highest point and actually moved more than 5% just in today's trading session. And that was indeed visible on the charts as well, because what a breakout this stock has witnessed today. You will see that around 1400 odd levels, this stock was facing resistance. Back then, we did spot a breakout, but it was not that great because the stock did consolidate for a bit, then moved back, took a support at its 20-day moving average, but once again resuming its journey upwards, and in today's trading session managed to cross this particular resistance zone with a strong green candle, moves above its 20-day moving average, as well as the move was also supported by a long build up on the derivative side. So this is the first stock on the breakout side. Moving on to the next counter, we don't discuss this stock much often, but what was interesting to see that KPR Mill did attempt to break above its key resistance of 850 odd levels, and in the longer time frame you will see that the stock has been facing resistance at this point in time. The stock managed to move above that level as well at one point in time, but is now trading above its 20-day moving average as well, and hence we took it as one of the other candidates in the breakout space. So these are the two stocks on the breakout side. Back to you.
All right, Srishti, thanks for highlighting Cholamandalam Investment as well as KPR Mills on the technicals and on the charts and what you've been spotting for these two stocks on the breakout side. But let's get a move on and talk about the word from the wise. And then today that happens to be Chetan Ahya, the Chief Asia Economist at Morgan Stanley, and he expects India to compound at 6.5% with a rising base till 2030. Thereby turning into an $8 trillion economy. Let's go across and listen in to why he feels that this number or this figure is achievable by 2030. Listen in.
So in the next 12 months, we think that 6.5 to 7% growth is likely. And then beyond that, we are at 6.5% on a real basis going forward. And that is up to 2030. So we think that, the way you think about India's story now is that it's going to compound on a high GDP base at that moderately high run rate. And that's going to ensure that India's GDP is rising up to about 8 trillion by 2032. So we've got a strong growth forecast continuing into future. You are going to have this investment push and investment-driven growth rates. That is going to ensure that the productivity environment is well kept and well maintained. That will keep the macro stability indicators in check.
And the high talks about compounding at 6.5%, but the more bullish and optimistic view coming in from CII president, who believes that there can be estimation of 8% GDP also. That's the word coming in from CII president Sanjeev Puri. He also expects the GDP to double in 7 years to come. Listen into what he said.
We are more optimistic than, all the reports or the estimates that have come out from agencies within and outside India. They have a figure which is somewhere in the region of 7, little bit plus minus, you can say. We are more optimistic. It is 8. That is the estimate by CII. Monsoons are going to get better, so agriculture production could be better. Clearly, we are expecting all the 3 sectors of the economy to fire: agriculture, services, and industry, all to do well next year. So expect public capex to continue to grow. We expect that the pace of reforms will only accelerate in mission mode. So we are seeing that the pace of growth of the economy will also accelerate. It took 10 years in the past for the economy to double from 1.7 to 3.4 trillion. We now believe it will take about 7 years to do that, going from 3.4 to 7 by 29-30.
All right, that's the word coming in from the CII president Sanjeev Puri, who believes the economy could double in the next 7 years. But here's a programming note for all our viewers. ET Now is celebrating its 15th anniversary with a landmark event, the ET Now Leadership Dialogues. From a keynote address by the RBI Governor Shaktikanta Das to a fireside chat with Keki Mistry, Dinesh Kumar Khara, Ashish Kumar Chauhan, Utpal Seth and Manish Chokhani, it will be an event you cannot miss. Indian Hotels Puneet Chatwal and Tata Consumers Sunil D'Souza will also join us to discuss the future of hospitality and consumption, followed by an inspirational talk by Gauranga Das that will provide invaluable life lessons. So stay tuned to ET Now on the 18th, that is Tuesday next week, and join us in our celebrations. Alright viewers, with that we'll slip into a very short break on this edition of Your Trades. We'll be right back with more on how today's session shaped up and what to look forward to for tomorrow's trading session. Stay tuned.
Right, welcome back. Now more on the side of derivatives. Of course, there was a long built-up trend for both Nifty and Bank Nifty. VIX has cooled further. Now it's below even 14 levels. The active calls which we saw for the coming week, for the next Thursdays, wherein we saw the maximum call writing action happening at the strikes like 23,500, 23,600, and now, since now, 23,400 was the resistance. Now the resistance is shifted to 500 as well as 600 strike. And the active puts, where we saw the maximum of the put writing, that means that happens to be the strong base also, is now 23,200 and 23,300. So this is more on the derivative side, but a lot of action coming in from the insurance space, Snehi.
Absolutely, and we covered this news bright and early in the morning as we heard about it, and insurance sector was in focus today because the IRDAI has asked insurance companies to offer a surrender value from the first year itself. Now this is a move, remember, that could impact their margins. The regulator issued a master circular which mandates insurers to pay special surrender value after the first policy year, provided 1 full year's premium has already been received. My colleague Anurag Shah has more details on this. Anurag, take it away.
In Master Circular of Life Insurance, IRDA mentions about change in special surrender value for life insurance policy, and special surrender value cannot be less than present paid up sum assured and paid up future benefit. So while calculating special surrender value, the benchmark interest rate would not be more than 10-year G-Sec bond yield with a cushion of 50 basis point. That leeway has been given by the regulator IRDA. Remember, in December 2023, IRDA came up with a draft notification to increase the surrender value, overall surrender value, which proposed to double the surrender value, but that has seen resistance from life insurers, and we have seen in final notification of March 2024, there was not much of a change in surrender value rules. It was linked with the duration of policy, but now the master circular clearly mentions about the increase in special surrender value that will impact life insurers negatively, because the life insurers margins will be impacted. Life insurance companies will end up paying more surrender value to policyholders, and IRDA has mentioned that new rules to be implemented by September 30th.
All right, thanks Anurag for taking us through that. All of the insurance stocks were in focus on the back of that notification coming in from IRDAI. But let me talk about another sector that was up and buzzing in today's trading session, the biggest sectoral gainer today, and that was Nifty Realty. And one of the constituents, Sobha Developers, was in focus today on the back of a rights issue that they announced. Now, the board has approved a rights issue to raise an amount not exceeding 2,000 crore rupees at an issue price of 1,651 rupees per share. The proposed equity issue is 12.1 million shares, which would lead to a post-issue equity dilution of 11.3%, assuming this entire issue has been subscribed to. Why are they raising funds then? They need funds to repay or prepay the debt that they've taken, to fund ongoing as well as upcoming projects, to purchase equipment and machinery, and also to fund acquisition of unidentified land parcels. So land acquisition is also on their radar, and also for general corporate purposes. Now, this deal is structured, or in fact this rights issue is structured a little differently. So let me take you through what the structure looks like. Out of this 1,651 rupees, which is the issue price, 825.5 rupees, which is 50% of this price, needs to be paid when you are making the application for the rights issue. The balance 50%, the other 825 rupees, need to be paid in not more than 2 subsequent calls, and this needs to be completed on or before 31st December 2025. So they've structured this rights issue in such a way that they keep receiving periodic intervals of funds. Now let's talk about what the ratio looks like. 6 equity shares will be given for every 47 fully paid up equity shares held by eligible holders, and to decide the eligibility of the shareholders, the record date has been set as 19th of this month. And also important dates to watch out for is the issue will be opening on 28th June and will be closing on 4th of July. So watch out for this stock and the rights issue and how it progresses in the days to come.
All right, saying so when companies or corporates are raising funds via QIP or maybe rights issue, that gives you how strong the underlying tone is. The next news which comes in from Transformer Rectifiers, which is of course launching a 500 crore QIP, and we did caught up with the management before that. Why TRL is in focus? Because on the back of the QIP fundraising plans, and we did speak to the management to understand the strategy going forward. Let's hear out a word on what they have to say on front of margins, revenue going forward.
Currently, we are not looking at any inorganic growth. Whatever we are going to do is an organic growth, mainly towards backward integration and expansion of our plants for green hydrogen, transformers and EAF transformers.
My dream is to have a bit margin of something like 18 to 20%. It all depends on how we perform on the export market, because export market is the one which is going to give us a good EBIT margin. By 2027, we should have the top line of somewhere around 3,500 to 4,500 crores.
Well, let's shift focus and talk about an exclusive story. Then all eyes are on the centre's PSU disinvestment strategy. Select big ticket candidates in the pipeline of the likes of IDBI Bank, SCI, Concord, BEML and others. So let's go across to my colleague Prakash Priyadarshi for the latest on what the government is planning when it comes to the disinvestment of all of these entities. Prakash, take it away.
is the preparation of the Union budget for the financial year 2024-25, which is going to be full-fledged budget, has been started, what the Finance Ministry has stated. Therefore, the necessary quarantine period has come into effect till the presentation of the budget in the month of July. That means outsiders' entry in the North Block will be restricted. Now coming on to related stories, what we are learning from our sources, that the government is unlikely to set disinvestment targets in the upcoming budget. However, we are given to understand that disinvestment transactions will be taken forward based on the market conditions, but there is a significant change in the approach. In fact, the sources are informing that the government will adopt a calibrated disinvestment strategy going forward, and the focus will be on value generation in the PSUs. In fact, the government is elated by increased dividend collections from the PSUs. Along with that, as you are aware that the government did not mention a specific disinvestment target in the interim budget. In fact, a target of rupees 50,000 crore, which has been set in the interim budget from disinvestment and asset monetization, but there was no specific disinvestment target. Along with that, the sources are also informing that the ongoing disinvestment transactions are likely to gather momentum as the elections are over, and the sources are also informing that big ticket transactions like IDBI Bank, Shipping Corporation of India, NMDC, Steel, container corporations are at different stages, and it is expected that the government will take forward these transactions during current financial year.
Thanks very much, Prakash. Of course, all eyes on Centre's PSU disinvestment strategy. Get us more update with time to come. Thanks very much for this update for now. Let's go to Gaurav now. He'll get us more stocks which were buzzing in trade today. Gaurav, take it away.
Well, let's begin with Paytm because there are two news flows for this company. The first one is that the company has now partnered with Samsung to bring travel and entertainment services along with Samsung Wallet to India. And second is that IRDAI has actually accepted the withdrawal of the company's application for registration as a general insurance company. Now the company will be focusing on insurance distribution, and on back of this news we saw the stock was up almost by 7% in a day today. Next, let's talk about Gensol Engineering because company has won a project of 250 megawatt for battery energy storage worth 1,340 crore rupees, and there is another green shoe option available along with the contract which offers another 250 megawatt project for the company, which offers a revenue potential of 2,680 crore rupees. And on back of this news we saw the stock hit upper circuit in a day today. Next, let's talk about some of the sugar stocks because these are in focus, and the reason being that the government is actually going to increase the minimum price for sugar. They are expecting the minimum price for sugar to be increased to 41 rupees per kg versus the current price of 31 rupees per kg. And on back of this news, we saw some stocks like Sri Renuka, Balrampur Chini gaining in trade today. Next, let's talk about KIOCL because company recently got an order from Ministry, Union Steel and Heavy Industrial Ministry, and this is for the operationalization of Devdari iron ore for the company. And on back of this news, we saw the stock increased more than 10% in a day today. Next, let's talk about L&T because company recently won an order worth 2,500 to 5,000 crore rupees from ONGC, and at the same time brokerage also were being bullish on L&T, where we saw Goldman Sachs coming up with a report with buy rating and a target price of 3,600 rupees. And on back of this news, we saw the stock gain in trade. And lastly, let's talk about defense stocks like BDL, HAL, Mazgaon Dock, because now Rajnath Singh has continued as a defense minister of India, and now he has said that he will be focusing on self-reliance when it comes to defense. And lastly, they are also expecting the exports of around 50,000 crore rupees in the next 5 years. So on back of the news flows, we will definitely watch out for these stocks and see how they perform in coming days as well.
All right. Thanks very much, Gaurav, for all those updates. Well, that's all in this edition of Your Trades. Thanks so much for watching. Stay tuned for more updates.
If you like this video, then like, share and subscribe to ET Now.